Well, I'm very delighted that Glyn Fullelove has agreed to be interviewed about the loan charge. It's something which he agreed some months ago, but for various reasons we've not managed to get this together until mid-March. But Glyn, thank you very much for joining me. But what I'd like to do first is just before we talk about the loan charge and some of the controversies there, could you just give a bit of an explanation about your background in tax?
Thank you, Keith, and I'm very pleased that we are at last able to talk. So I joined Arthur Andersen back in 1986 after a short spell after university working for BP. I qualified there as a chartered accountant and a chartered tax advisor. And I spent 12 years in the profession, so working for accountancy firms in total. The last 3, I was a partner and the head of international tax for a mid-sized firm called Robson Rhodes, which is now been absorbed into Grant Thornton. And I then spent 20 years working in commerce as the head of tax for various roles, but I had 4 main roles as the head of tax for UK headquartered multinational corporations. So in fact, for almost the entirety of my working career as a tax advisor, I was working on the tax affairs of large multinational companies. So that is my specialization, if you like. I left my last commercial role in 2018. So 20 years after starting in that area. So, and that was with a FTSE 100 company called Informa PLC. And that was partly because in May 2019, I became president of the Chartered Institute of Taxation, which I'd been involved in for many years, on the council since 2014. I chaired the technical committee between May 2016 and when I became president in 2019. But as well as being involved in the Institute in the last couple of years, I've also been writing for one of the tax publishers, Kroner I, first as a freelance and then since last July as an employee of Kroner I, where I now work 2.5 days a week. I still do quite a lot of work with the Institute and other tax-related work as it comes along, most of which is unpaid, but it's still tax-related. So that's me.
Thank you very much. I just want to pick up something on your presidency of the CIOT. Now, I've spoken to a number of presidents over probably about 2 decades. And the typical term of office is May one year to May the next calendar year. And there are a lot of events in the calendar which are pretty predictable. And the feeling I generally get is that once you get past Christmas, and particularly past the presidential lunch in January, you've got 4 months technically left, but it's more or less coasting downhill from that stage. You can almost start putting your feet up. Now, I don't know whether you felt that in January 2020, but you had at that stage 4 months left. And then in March, the world changed. Is that a fair account as to how you saw what was going to be the last 4 months of presidency?
Not quite. I think in January, I still felt we had some substantial projects to complete. Both with the Institute and I'd been I'd been attending something called a Compliance Reform Forum, which is an HMRC committee, which had a particular project looking at its compliance activities and improving inquiry procedures. And I was quite involved in that, and also on the Powers and Safeguards Evaluation Forum. I was representing the CIOT there. So certainly in January, I felt we still had that work, which I wanted to bring to as far as I could. I think we expected both to come to fruition more or less by May. So I was very keen to see those through. But yes, I mean, we had one still fairly significant event, which is very significant for the Scottish part of the Institute, which is we have a lunch, a landmark lunch with the Scottish tax community in March. So that was still very much on the horizon. But to some extent, yes, you are by January realizing that it is going to come to an end, and you have got to start paving the way for your successor. So we were beginning that process when March came along, and then there was we're almost exactly a year on, of course, as we speak today, from lockdown. And this time last year, things were, they weren't developing daily; they seemed to be developing hourly, and so it was, as soon as the lockdown was announced, and we realised that this wasn't just going to be for, it's very unlikely it was going to be for a day, days. It was going to be months rather than weeks. We had to reevaluate what the Institute's activities and program was going to be for the rest of the calendar of 2020. And it did look, even at that stage, it looked like my successor, Peter Rainey, wasn't going to be able to do anything like the normal number of events. And I know you know Peter quite well, Keith, and Peter is an exceptional ambassador for the profession. He's very keen at getting out and meeting members, and very well known among the membership. And I think for him to have had a presidency where he couldn't do, could hardly get out at all, would have really not played to his strengths at all. So to try and accommodate that, or to try and be more sensible about how things were going to work out, we decided that we should both extend our presidencies for 6 months. So I should carry on until November. He should start in November, and then the hope was, and it's beginning to look like it is going to work more or less, that by May, when when the presidential year would normally start, he'd be able to start doing a more normal year of events. So he would be able to do most, if not all, of the events he would expect to do. But I mean, so that was of course just one a relatively minor, I think you could say, impact of the pandemic on the Institute and the profession. I mean, much more immediate was the need to get everybody out of the office and working from home. And it was only within a week or two, of course, of lockdown announced that Rishi Sunak started announcing all of the support measures, most of which were delivered through HMRC. And there was an enormous amount of work for the Institute and other tax and all tax practitioners to do to put that into effect. So it was an extremely busy time for the Institute as it was also completely changing how it was working from home rather than from the office.
And a lot of work was done by Litrig, which is part of the CIOT. I'm not quite sure whether you'd consider it to be autonomous within the CIOT, or whether you as CIOT president can claim some of the credit for all the hard work they put in.
I think I would give that to them. I as I've explained, it wasn't, none of the support measures aren't really falling into what I would regard as my specialist areas of tax. So I very much had to sort of let the team get on with that. I was the only credit I can take is trying to be encouraging, and also trying to ensure that it was facilitated as much as possible, that we kept our eye on ensuring that was given the support it needed, and also that we got the message out, that we had to sort of be more adept at using social media, which is something that CIOT had used a little bit, but that was one of the ways of getting messages that we were getting from government out to the majority, out to the tax advisors and the general public as quickly as possible.
Okay. So you think that the CIOT fared in unprecedented circumstances pretty well, with the benefit of hindsight.
I think we adapted very well. I think a huge amount of credit goes to the Chief Executive, Helen Whiteman, for ensuring that we kept doing what we were trying to do. And I think we're publishing our annual report in the not too distant future. There were, I think 22 easements of the original coronavirus support measures, of which 14 were suggested by the CIOT. I would say that of those, we weren't the only people mentioning them, the only people suggesting them, and a lot of them were suggested by other people as well. But I think the fact that that number of proposals were adopted by government does say something for the CIOT. And we were the technical team was in, I think still to some extent is in daily contact with HMRC on the measures, trying to make them work as effectively as possible. So I think we contributed as well as we could into the during the pandemic. And the Institute itself has sort of remained in good health. I mean, we are fortunate that we are a subscription-based body. That's where most of our income comes from. And by March, as in any year, most people had already paid their subscriptions. So we weren't in the situation where we were looking at the income falling off a cliff. The other, I think, major development was moving all of the exams online.
Yes.
So we couldn't, there wasn't time to do that for the May sitting. We ran one as a pilot and learnt a lot from that pilot. And as I said, I was very grateful to everybody who sat that exam. Yeah, and whether they, however well they did, they should always remember that they did a great, as well as sort of trying to do something for themselves. They did an enormous service for the CIOT in helping us understand how to run online exams. And we did make some modifications and then ran, but by all accounts, was a very successful set of online exams in November. And I think it's clear that we won't be going back in total to the old system of everybody turning up at a hall nearby, where, well, sometimes not very close to where they live, and sitting the exams in pencil and paper. I think that those days are probably now gone forever.
I have fond memories of going to my exam. I remember bumping into a former colleague of mine who I then didn't see again until she joined me on council about 2015.
Gosh. I mean, I suspect it will, like many things, we will move back towards something resembling a hybrid model where there will be choice. But I think the online exams are there to stay in some form.
And do you think lectures online is the way forward, or do you think again it would be hybrid?
I think hybrid. I mean, we learnt a lot about doing CPD, continuing professional development. So lectures that might have been attended by 30 people in a drafty hotel room in Bedford or somewhere were suddenly being attended by hundreds of people from all over the country, if not all over the world. And so I think you realize, and I think we felt we were actually being able to deliver more knowledge to more people than ever before. And also a lot of lecturers quite like it, because rather than having to do 10 lectures, they only have to do one, and they reach a much wider audience. So it's much more efficient. But at the same time, people like to get together. I mean, you won't, if you're attending an event, it's not just for the content, it's also for the networking.
Yes.
And people definitely are missing that aspect. And however you try, how hard you try over Zoom, you can't replicate the face-to-face nature of networking contact. So I'm sure there will be a return to some there will be a return to face-to-face meetings. What I hope is that people will realize that the big gain from face-to-face is that networking, and we put as much stress on that aspect as we do maybe the content of a meeting, a branch meeting, whatever it is, as we go forward.
Well, since we've clearly touched upon controversial matters such as the future of CIOT's CPD delivery, I'll go on to something probably equally controversial, and the subject of tax avoidance.
Yes.
Now, first question I want to ask you about tax avoidance is just if you could explain your perception of how attitudes have or have not changed over the course of your professional career.
Yeah. And
in particular, you've mentioned the fact that you worked for large multinationals. Now, for many people, particularly non-tax experts, but tax avoidance is something which is particularly perpetrated by large multinationals. So I don't know whether you wish to comment on all of those, but just wanted to put a bit of spice in.
So I guess we should start with what tax avoidance is, and you can write books on this, so it is quite difficult to sort of sum it up in a few words. But for me, tax avoidance is the taking of a position which appears at odds with what the legislators who put that provision in place would have expected the result to be, is highly likely to be challenged by tax authorities, quite possibly through to the courts. A hallmark rather than a sort of definitional point would be that to fit within the words of the legislation, you're quite often involved in arrangements that appear quite contrived, and the net result is something that the person in the street would regard as a perverse outcome, an outcome that they wouldn't expect to see.
Now, just stop you there. Now, that's a perfectly plausible starting point for a definition. Yeah. Would you say, and you feel free to go either way, that is exactly the target of the anti-abuse rule? Do you think avoidance is wider or narrower than what the anti-abuse rule should cover?
I think the anti-abuse rule has been set up to target particularly egregious types of tax avoidance. Mm-hmm. I mean, if the anti-abuse rule was going to outlaw all anti-avoidance, we wouldn't still have a plethora of anti-avoidance legislation across the tax code. So I think the anti-abuse rule is almost the last line of defense. It's sort of it's there to pick up and stop, because of the way it works with the anti-abuse panel, yes, particularly abusive forms of avoidance.
So what you would say is that tax avoidance is something that someone on the street might consider to be perverse, but that's broader than what the legislation you call egregious to be within the anti-abuse rule.
Yeah, I think there is a yes. I think there is a spectrum of avoidance. I mean, I think it's hard to say. Once you sort of start to say this is avoidance and this isn't avoidance, there is a bit of a spectrum between planning and avoidance, and it is quite difficult to sort of put. And that's why you can write books on it, is because it's actually sometimes quite difficult to draw the lines.
I mean, no, the reason I picked it up is that there was an interview with a former colleague of both of ours from council, Armin, who was, I think he was interviewing Richard Murphy on the radio about 3 or 4 years ago. Right. I think it was Richard Murphy said, well, actually, since 2013, avoidance is now unlawful because of the anti-abuse rule. So Richard's view appears to have been, I hope I'm not misrepresenting him, it appeared to be that avoidance equals abuse. Now, whether he's extending abuse or narrowing avoidance, I don't quite know.
Yes.
But
Yes.
you're taking the view that there is a spectrum, and therefore there is perverse avoidance that isn't caught by the anti-abuse rule. I think that's the position you're saying, and I probably would be tempted to agree with you.
I think there is avoidance that isn't caught. Yes. Well, it may well be caught by the anti-abuse rule, but it's probably caught by something else first. And generally, I mean, there is generally, without getting too technical, I was been doing some work on the loan relationships rules. Yes. For Krona.
Lucky you.
And with it, yes, and within that the loan relationships rules are full of anti-avoidance provisions. But really, even with that, there's a sort of hierarchy. You've got provisions that deal with very specific instances, which probably never happen anymore because the anti-avoidance rule, is there and stops them. Then you've got a regime-wide anti-avoidance provision, which you think, well, if it's regime-wide, surely it covers everything. But then you look at HMRC guidance and say, well, it's not really supposed to cover transactions that just involve a lending from one party to another, but you can still have avoidance in that lending, and that's where the unallowable purpose rule comes in. And I'm quite sure that then there are other things that you might find that they weren't covered by any of those, but that could still be regarded by HMRC as falling within an avoidance. So the legislation itself seems to be designed to sort of cover a multitude of different types of avoidance occurring in different ways and counter it in a number of different. What
you said, and I'm going to pick you up on this because I like cross-examining people and haven't done so for some months. You said that the anti-abuse rule will probably be unnecessary because there are enough anti-avoidance rules elsewhere in the legislation to catch out all other avoidance.
No, I didn't say that. I don't. No, I think many things will never be subject to the anti-abuse rule, even if they possibly could be, because they're already picked up by another rule.
Yes. Okay.
The anti-abuse rule, I think, is there to stop new avoidance being invented of a particularly egregious kind, which hasn't already been covered by existing avoidance provisions. So it's there to stop the proliferation of avoidance.
Well, in that case, could I then sort of take you to what Lord Hoffman said round about 15, 16 years ago?
Yeah.
Ultimately, there is no such thing as avoidance because either you're within the taxing legislation and there isn't a tax charge, or you're not. Are you going to go quite so far there is no such thing as avoidance, or do you think that there is avoidance that works, but for the potential application of the GAAR?
I think avoidance is more of a behavioural thing, isn't it? It's you are trying to not pay tax that the government and most of your fellow taxpayers would expect you to be paying when they look at the law as it stands, or when they transact in similar ways to the way you have transacted when you're claiming that there is no tax to be paid.
Okay, I'm going to stop you there. I'm going to pause you there.
And I think, okay, Keith.
The government and fellow taxpayers, the government or fellow taxpayers?
I think it could be either. It could be both.
Okay, so HMRC often gets the tax law wrong.
Yeah.
Does that mean that just by taking a position different from them, that is therefore avoidance?
No, clearly not. I mean, there are, as part of my role, I have to occasionally write on tribunal cases, and one comes across instances where there is a definite difference in the interpretation of the law between HMRC and the taxpayer, but HMRC would not say that that is a matter of avoidance. I mean, I think there was a case you may have seen recently, the Roger Preston case around intangible assets, where a company said they had acquired an intangible asset, recorded it in their books. HMRC said they didn't think they had acquired an intangible asset. They were not saying that the company that had said it was trying to engage in avoidance. They were just saying there was a difference in interpretation about what constituted an intangible asset. In which, and then in that case, the taxpayer was the tribunal found in favour of the taxpayer.
But that was a case. If that's a case involving pure interpretation of law, but if there are behaviours, and I remember, I think it was the last time I attended the Cambridge conference of the CIOT, which was when you were vice president.
Yes, right. Deputy president, I think.
Your deputy. And you had introduced me to talk about IR35.
Yes.
The week it was announced that Lorraine Kelly had won her appeal. Now, would you say that IR35 is an anti-avoidance provision because someone is structuring their affairs in a way that HMRC considers to be avoiding tax? Is it an avoidance case or not?
It's a good question. I think it's there are instances where people have structured their employment in a way that is abusive, but I think I'm not convinced that IR35. I think IR35 is an attempt to deal with changing employment circumstances, and dealing with there is a strategic threat to the tax system, which is that people, as we've found over the last year, are finding it much more easy to work from home, much easier to work in what is no longer what we would regard historically as that conventional employment. There has been a move to much more flexible ways of employment, and the tax legislation, the way that we have looked at it from a tax perspective, hasn't really caught up. It sort of mirrors to some extent what's happening in the digital sphere, when you've got these massive changes in the way that we transact, and the tax system sometimes fails to catch up with it. So I think there is an element that IR35 was sort of trying to bridge a bit of the gap there. But at the same time, there are cases where it is fairly clear that somebody is, someone looking at it from that side would say, it looks to me like, I'm employed by this company, for example. You appear to be doing exactly the same job in exactly the same way, subject to exactly the same conditions as I am, but you're saying you're self-employed and get taxed in a different way. And that doesn't seem right. And so, and again, I think the distinctions between being self-employed and claiming to be self-employed can be very fine and can be very marginal. Okay.
The question is, if someone loses an IR35 case, are they by definition failed tax avoiders, where someone who wins, not a successful tax avoider, but just someone who's being taxed in the right way? That's the first question I'd ask. The second one I'd ask is, if you can think of a hypothetical example of someone who was working as a freelancer with Krona I and then becomes a full or employee. Do they have to? I don't want to get into too many details in a real life example, but it can be a very subtle change. And yes, I can certainly understand someone who's working 9 to 5 at the same desk in the days when people worked next to each other on desks. But sometimes if payment structures are different, holiday pay just falls out of the way if you're freelance because it's sort of built into the number of hours you're going to give to someone. Pension pay falls out of by the wayside because that's just all built into the commercial deal. How easy is it to define what is the abusive arrangement that IR35 is targeting, and therefore it's clearly avoidance by both of your and my definitions, and what is just simply a consequence of commercial life in the 21st century?
Yes, it's not easy. It's not easy. And I think one of the questions I've been asking over the last couple of years is, should we even to some extent try and make that distinction? Or should we actually be trying to tax work rather than tax the earnings according to how you articulately defined it in the form that you receive them, making it different, but looking at and that brings into questions about it sort of brings into the question of risk. And you're far more because Keith, you're far more expert on this than I am. This is I'm, as I've explained, I'm not a specialist on IR35 or on,
even having heard my lecture at the Cambridge conference.
Even having heard your lecture, I would still not claim to be an expert. So these are difficult matters. But the IR35 distinction in the end it's about you're earning a certain amount of money, and are you taxed as an employee, or are you taxed as self-employed, and are you fulfilling all of those obligations? And I think in all of I've not seen anywhere in the IR35 cases that you and others have been involved in and talked about, instances where people have said, I shouldn't be taxed at all on these earnings. It's just that I should be taxed in this particular way, yes, rather than that particular way. So so they've been trying to achieve a more advantageous form of taxation in most instances, but not trying to avoid the payment of tax altogether.
But I always thought the definition of avoidance included, or the working definition, paying less tax than otherwise.
I think it could be, but again, this is where it gets back to, I think avoidance can be, that's why I say there's no one definition of avoidance, and there's no one point where you can say this is avoidance and this is not. That's why there is a spectrum. So
let's look at that spectrum. Would you say large multinationals are guilty of tax avoidance, or is it just simply a case of the tax legislation not catching up?
Well, I think large multinationals have been involved in tax avoidance schemes over the years. I mean, let's not pretend, I won't pretend that they haven't. And those, many instances, those tax avoidance schemes meet the sort of criteria. And I said before, you enter into an arrangement that lowers or eliminates taxes on a series of transactions where the government and most other taxpayers, if they have a understanding of the legislation, would expect it to be paid. Quite often it's a those situations would be where losses appear for tax purposes, but not for economic ones. You know, a company somehow within a group of companies, somehow a loss has appeared, which is deductible for tax. But when you look at the company's overall financial performance, that loss is nowhere to be seen. So, I would say that was prevalent, particularly in the late noughties, around just before the financial crash. I think that was probably the height of the UK tax avoidance craze, or the height of UK tax avoidance for large companies. I think there was a reevaluation after the financial crash, and a realization that that form of tax planning was not only bad for a company's reputation if it came out, but actually also gave rise to a large amount of risk for the company, in that I think they realized that amounts of tax that they thought they might not have to pay were actually going to have to pay, and actually have to pay quite large amounts out. And whilst pre-financial crisis that might have meant one thing, post-financial crisis it meant quite another thing altogether. So I think there was a definite move away from that type of avoidance post the financial crash, that those type of engineered structures which were designed largely, I would say, domestically in the UK, or wherever you happen to be based, yes, to avoid your local taxes.
And would you say that included having service companies out of Ireland, or double Dutch mixer companies, or whatever they're called? It's never been my strong point. Is that avoidance, or is that just simply a legitimate use of the framework for international tax, which has been around for a century, or had been around for nearly a century?
I think so. So moving on to that type of planning, and I think the OECD and others have been quite and intentionally define that as something called base erosion and profit shifting, and tend to refer to it as aggressive tax planning rather than tax avoidance. And I think the reason for that is, if you look in any one jurisdiction, it probably doesn't meet my definition, or the definition of tax avoidance, because what it is based on is saying to the tax authorities in the UK, here are my set of transactions, and I think within the framework of the law as it stands in the UK, and the intent, and I'm not, there's nothing happening here which is going against the intent of what you've put in the legislation. I think this is the right amount of profit to be taxed in the UK. And now you may well have in there payments out of the UK by way of interest or by way of royalty to a foreign jurisdiction, but you're able to say, look, the funding came in from overseas, that's been borrowed from overseas, I'm paying the overseas lender. This intellectual property I'm using has clearly not been developed in the UK, has got no real nexus, has never been, there's no indication that there's ever been any work done on it in the UK. I'm right to pay a royalty overseas for the use of that property. And I think that type of arrangement is, if we're looking at it from a domestic UK point of view, you can say, well, yes, the authorities say, yes, I agree with you. You've defined correctly the amount of profits to be paid in the UK. Of course, what happens is those payments of interest and royalties, they're not being paid they're not ending up somewhere where you might expect them to end up if you're the subsidiary of a large US multinational. They're not ending up in California being subject to American, federal and state taxes over there. It's ending up in the Cayman Islands and Bermuda or somewhere like that. So when you look at the totality of the arrangements cross-border, the amount of tax that the multinational is paying as a whole does not seem to be commensurate with the profits it's making. So that is not although it's not engaged in what classically would be regarded as tax avoidance, the result is still something that can undermine trust in the tax system.
And is what?
Because
it'd be less tax than my fellow taxpayers might think I ought to be paying.
Indeed, yes, yeah, and doesn't seem to bear the tax that they're paying globally. Doesn't seem to bear a sensible relation to the tax rates where they're actually operating and the profits they're actually making. And so that, you know, so if again, it's a case of somebody taking advantage of the system, as they doing with tax avoidance, in order to get themselves into an advantageous position compared to another taxpayer. But, you know, you can't, you know, in the classical ways of dealing with domestic tax avoidance don't work with international tax avoidance, because you can't stop every transaction happening, every cross-border transaction happening. Otherwise, you have no cross-border transactions happening at all. So you can't simply stop those type of transactions. So, you know, the ways you stop that are by having a multilateral approach, which effectively means that, you know, the payment from the UK does end up in the US and is taxed in the US rather than ending up somewhere where it's not taxed. And there is greater transparency over the affairs of large corporations, so it's much easier to see what they're doing. And that's been the thrust of what the OECD has been trying to do over the last 8 or 9 years now.
I'm now going to have to move on to the loan charge because
yes,
we've got about 12 minutes left.
Yes,
and
yes.
This is what was the original prompt for this discussion. Yes. And this started with a note you wrote in your, I think it was one of your last presidential editorial messages. I don't know if you see the whole thing.
I can, yeah.
But actually, I'd like to go back before then, because I remember your inauguration speech back in May 2019, when I think you described the loan charge in the terms of extreme retrospection. I think that was the term you used. Does that ring a bell?
It does, yes.
And you wrote in Tax Advisor this note would have been about 18 months later. And I then sort of, on Twitter, sort of engaged with you on a couple of points about it.
Yeah.
I agree with much of your reflections, but just wanted to pick up on a couple of points. Comment one, the tax position was sufficiently clear after December 2010, and people should have, I think it was mainly advisors. Now, and the mentioned comment too, as we're here, if further relief is to be available, they need to focus on mis-selling. Now, as a tax advisor, I probably don't disagree with much of what you're saying here, but just wanted to then pick up a couple of these comments. On the first one, what I have seen is that these schemes, which had been missold, as you accepted in the first place, morphed from being employment-based arrangements to self-employment-based arrangements. And you've explained before that there's quite a fine distinction between the two. And when you deal with contractors, it's a very fine distinction because it's not a permanent work. So when the schemes change and were then being addressed as, well, there's been new legislation, so we need to make sure that we're still compliant with the law. To the typical user, would you agree that 2010 did not mark an obvious change, and therefore these schemes should also fail?
I think, yes, I think here in 2010, so the law changed, as we agree, on employment.
Yes.
And the scheme, and then the providers, whoever they were, attempted to come up with something that worked in a different way. But the 2010 legislation also should have been a huge red flag to any advisor saying, saying HMRC is going to come for these schemes, however you try and construct them. And let's bear in mind that this is 6 or 7 years after Dawn Primarolo had stood up and said, we may introduce retrospective legislation, particularly in the area of employment income, if we see a proliferation of avoidance. So I think for any advisor or any promoter of the scheme post 2010, if they continue to sell them, if they wish to continue to sell and promote these schemes,
which they are still doing,
which they are still doing, yes, indeed. But there should have been an extremely clear explanation to the user of the scheme of the risks that they were running. And I don't, I think the evidence seems to suggest that that explanation of the risks and the potential for extremely long and intrusive inquiries from HMRC into their tax affairs, that they may, the prospect of penalties, the prospect of interest, that does not seem to have been conveyed. It merely seems to have been a case of, oh, well, okay, those schemes don't work anymore. These do. Adopt these and use them.
So that, I think, does then lead you very neatly into our comment too on the mis-selling.
Yeah.
So what you're saying is that from a moral standpoint, these users who weren't actually getting the benefit on the whole of the tax savings anyway, but they're not the ones who should necessarily be blamed for the predicament that they're now in. The blame should be land squarely on the people who are duping them and selling these schemes and amending these schemes and not giving them a clear warning. There is danger around the corner.
I think the if you're looking at the case of morally who is in the wrong, then I think you're absolutely right there, Keith. Yeah.
Yes.
So but I think once you say that is the situation, you then say, well, how do we deal with this? And I think there are a number of precedents for dealing with mis-selling scandals.
Yes.
And that is then you say, okay, let us look at what the problem is here. And particularly as where we are here and now. Because I mean, let me put a point to you in that if we were today in a situation where we have the provisions around the loan charge as they stand today post the Morse review and post the changes last year, and every person, you felt confident that every person that had ever been involved in a disguised remuneration scheme and was still under investigation or in discussions with HMRC, every one of those people knew exactly what they were doing when they entered into that scheme. I don't think we'd be having the same kind of debate as we are today. I think we might still be having a technical debate about whether, these are quite the right provisions, but I don't think we'd be having the same type of discussions as we are now. And I think that, that leads me to say, okay, the problem here is primarily now one of how do you deal with people who have been missold something, and that's where the answer should come from.
And I can certainly see where you're coming from, but I think the problem I have is, let's leave aside the loan charge. Let's suppose the Finance No. 2 Act of 2017 didn't happen.
Mm-hmm.
These people, whether Morse had happened or not, going back many years, many of them would still be facing closure notices for those who did have valid inquiries, or discovery assessments when the revenue sort of spotted their oversight in time.
Mm-hmm.
And I can say in 2021, it is terribly sad that an inquiry which was opened by some mild letter in 2005 saying, we will let you know if there's a problem, and then nothing heard at all for 16 years. And then suddenly a closure notice comes along and said, well, actually, we didn't let you know, but something was wrong. We didn't like it. And we did have similar letters in 2006, 2007, 2008, for let's say 5 years. So we're now going to litigate or say, actually, Rangers tells us that you should have paid the tax for those 5 years, which if we told you in advance or in 2005, actually didn't like these, you could have at least got out and missed out the last 3 or 4 years. Now, I think there is a failing in the tax system that inquiries can last for so long, and it requires the taxpayer to know that a closure notice application could have been made. And this is something that Morse has tried to address, although it's not been covered in legislation.
Mm-hmm.
But I wouldn't be standing up and protesting about inherent unfairness of the system. I'd say, okay, we've now learned there is a problem which should be rectified with possibly annual renewals. But I have never said, and many people will probably be disappointed in this, but I've never said, and I've quite often disavowed the point, I will never say that a 2005 inquiry, if validly opened, cannot be legitimately closed now and pursued through the normal course of litigation. You run your arguments, you might win, you might lose. It's terribly unfair. Where my objection has been was that the loan charge sought to draw a short circuit to the entire litigation process by saying, well, it doesn't matter even if you win that there wasn't a valid inquiry, or there's a PAYE credit, or there wasn't a discovery assessment, or whatever argument you might wish to raise, or even that it was a valid loan and shouldn't be taxed in the same way that Rangers says it might be taxed. The loan charge says, we don't care, we want our money. And that's why I've always objected to the loan charge, is that it was an extra device brought in to avoid the revenue, risking losing litigation. And if we go back to the avoidance schemes which you've referred to in the late nought, or up to the late noughties of the multinationals, there's very little difference, I think, between the loan charge and the revenue saying, we're dealing with XYZ PLC, a long disputed arrangement where this company managed to pocket £1 billion without paying tax because of the arrangements it had entered into. Well, we could litigate that, but what we're going to do is say, well, if it doesn't pay us the tax on that £1 billion by the 31st of December 2021, we're going to impose a charge equal to the value of that retained tax benefit. In other words, you can litigate in the first-tier tribunal all the way up to the Supreme Court on the scheme, but the revenue is still going to get their tax on that £1 billion because of an extra charge brought in. That's why I've always found the loan charge reprehensible. And I don't know whether you can see a distinction between those two situations.
I think the reason that HMRC has never taken that line with large multinationals is because generally it's been able to capture the entire population of those involved in those large-scale avoidance schemes, large avoidance schemes, and resolve matters so that it does ultimately collect the tax that it's due. So I think in the case of large, there have been very few cases, I think, of large multinationals actually being able to win tax avoidance cases when it's gone before the courts.
But I have seen cases where the revenue have simply failed to open inquiries in time, and therefore they've dropped it.
There may be,
and that's including large companies, not necessarily multinationals, but certainly
yes.
large.
And I think you're right. But I suspect again you're probably looking at relatively, a small population of numbers of cases. The sums involved may, I admit, be quite large. I think what happened, and one of the reasons we ended up with the loan charge, is there was an underestimation on many sides. And I think, I look back at how, when the CIOT, if you like, ultimately realized what was going on with the loan charge, or with disguised remuneration. I think HMRC started pursuing disguised remuneration in the same way that they did with all of any other avoidance type of case. And what is different here is because I think in large part it has been mass marketed and missold. The population of cases and the range of cases and the type of taxpayers that HMRC has been dealing with has been completely different to any other avoidance event in history. And I think that lies at the root of why this, why we ended up in the position, as you say, where an inquiry could have been opened in 2005, and then suddenly no one hears about it for another 15, 16 years. Now, with a large multinational organization, that would not happen because of the way that the relationship is dealt with, and because everybody involved knows the rules of the game, and the resource available to HMRC was generally, I'm sure they would always like more resource, but generally commensurate with the problem they were trying to deal with. And I think in the case of the disguised remuneration schemes that have, the explosion of the schemes over the last 10 years, 20 years, the system could not cope.
So the question I would then ask is, why should it be the taxpayers, the contractors in particular, who have to pick up the pieces with a legislative fix to deal with either a resource problem, which is ultimately down to Parliament?
I think I think where I'm driving from with saying, if we actually look at the fundamental problem here was the mis-selling of the scheme.
Absolutely.
Then,
well, I would actually disagree. I'd say that's one of the fundamental problems. The second fundamental problem is the revenue's inability to address it effectively at the time.
In terms of the revenues, I mean, I can't speak to that because as I say, we are now sort of out. This is an awful lot more about this than I do, Keith. So
yes,
I'm not going to say yes, clearly it is, or no, clearly it isn't. But I think
you did say that with large multinationals, the revenue are able to capture the entire population.
I think in general. I mean, I think there was one scheme
yes.
I sort of peripherally saw a few years ago. I probably could tell you the 10 companies who were probably involved in it. So
yes.
So I think where I've been sort of trying to get to says, how do we deal with a mis-selling event? Yes. Well, you try and work out a scheme that, if you can, compensates people for the impact of the mis-selling.
Yes.
And when you work out the scheme and who is going to pay for it, you have to look at the entirety of the facts and reasons behind the mis-selling, what's created it, may have compounded the impact, and what's compounded the losses to the individuals involved. And then you try and, if you like, raise the funds to recompense the individuals who have been mis-sold from those who are culpable as far as you can. So I think by taking that approach, I think we could address some of the concerns I think that you are also raising on why so the initial event is the mis-selling, but then that may be compounded by a failure of the system to then process the consequences in an efficient and effective manner.
The thing is with mis-selling, now I suspect there's going to be another scandal involving pension liberation schemes. But on the whole, I suspect most mis-selling doesn't have a direct tax impact. Therefore, the parties are the regulator, the mis-seller, and the poor victim.
Mm-hmm.
With these arrangements, the revenue is clearly a party to be involved. And I'm just trying to work out why, even if there is to be focus on the mis-selling, why the Exchequer must continue to exert the pain on the victims of the mis-selling, just so as to increase the amount of compensation that these victims might be able to recover from another party. Surely, the Exchequer, which is effectively all of us, and we're all guilty in that we've all underpaid, under-resourced the revenue as a country, surely the Exchequer should take some of the pain rather than having the loan charge introduced as this remedy to cover up for previous incompetencies or shortcomings, if I use a slightly less controversial word, in the system.
So I think we want, yes, if we can bring this to a resolution with the minimum of additional pain, or with no additional pain, I think that is something that we would all want to do. It's a case of, can we do that? If we let, I think the key here is to give people hope that there is a resolution, and it's not going to be, the resolution is not simply going to be them paying the money and them, in some instances paying, substantial amounts of money forever. But there is going to be some something that assists them to either meet that requirement, or that requirement will be discharged in some other way. I think if we can, I would hope would sort of take away much of the fear and anxiety that the current arrangements are causing.
So I just wonder why the obvious solution is not abolish the loan charge, or at least make it prospective from either announcement in 2016 or enactment in 2017. In other words, you don't have this retrospective, extreme retrospection, as you called it, which is only there to remedy the incompetence of others. It just seems to be a punishment strategy, as I think your predecessor as president called it.
Okay, I guess where we've tried to solve this through the tax system, one way or another, over the last 15 years or so, whatever it is. And every time we do it, we don't seem to get to a resolution. So I'm coming to the view that actually we should just stop trying to solve it through the tax system. Focus on what is the actually the basic problem, and find recompense, establish something that can compensate people for the losses they have suffered outside of the tax system. Let HMRC do whatever they need to do in terms of working out what the liabilities are. So to some extent we square the books. We say, right, this is the amount of tax that was lost. This is the amount of this is the amount that should have been collected by the state. And then it may well be with one there is one hand that is actually collecting the tax and another hand that's actually giving it back, so that it's being discharged. But let's stop trying to fix this through the tax system.
So would you go
find another way of doing it?
And as far as the long-term solution, I think I agree with you, but equally the loan charge was a fix through the tax system. of a problem not of the victim's making. So I'm not sure whether you're going to actually agree or whether you're going to not formally agree, but not necessarily disagree. I still think the loan charge was and remains a wrong measure to address a much bigger problem.
I think so. Let me put it this way. I don't think we will see its like again.
The words "never again" don't necessarily justify what happened before.
No. And I think the fact that it did there's have been significant changes to the way it operates indicates that certainly the way it was brought in, the initial implementation of the loan charge, I don't think it was, I would say, even if, going back to my criteria, even if the vast majority of people had known what they were doing, I think the loan charge was actually disproportionate. I think now the loan charge was disproportionate even to people who had actually known that they were involved in tax avoidance.
And I completely agree with you on that.
I think, the fact that in its current form, it's less objectionable with the easements that Morse's reporters resulted in.
It still creates a charge which makes litigation and valid litigation in the tribunal pointless. And I don't think that that is appropriate. Everyone should have their right to a proper argument. Now, they might win on these post-2010 schemes, they might lose, but surely they're entitled to their day in court.
I guess the other aspect of it is if we simply abolish the loan charge, it doesn't help anyone who has been missold a scheme, but has an open inquiry. And
it does if they have a valid argument in relation to those the inquiry years. For example, the existence of a POA credit.
But if they, there may be, but if they don't, if they took, if they go to court, so if they go to the tribunal or they go to court and lose, they still have to pay.
Yes.
They have still lost. They still have to pay. They have still been found guilty of tax avoidance, when actually they are a victim of mis-selling.
I completely agree.
And I think, so I would say, I would rather say, well, okay, the loan charge, we are where we are with the loan charge. And it's not, it's not something that I would be proud of putting on the statute book. But I think I would prefer to see everyone who's been missold a scheme to be properly recompensed for the losses they've made, and to be satisfied that they have all, that they have been taken out of the agonies they've put into, rather than say, okay, we have taken something off we've taken the loan charge off the statute book, and that's a good thing from a tax system point of view. So
I think I'd say yes. I think the way I'd put it is they should take the loan charge off the statute book, but not stop there.
Okay. Yes.
Because there's a wider problem.
And I say the other thing, pragmatically, I don't see any willingness at the moment of the government to sort of engage in further discussions around reform of the loan charge.
I think
and so from a pragmatic point of view, I'm not sure that it's worth sort of carrying on fighting something when I think there is a strong moral case against for recompense for mis-selling, and then and I think the Exchequer's probably got a hand to play in generating those funds, and that also would be recognition, to some extent, of failings in the system that the state has been involved in. So I think there is a solution which can be achieved without further legislation, without further complicating the tax code.
Well, removing a provision I would not normally call as complicating, but I understand the point you're making. We are running out of time. I was going to ask you about trust in the system. Do you have time to address that, or should I just formally thank you for your time this afternoon?
I mean, I don't think we've got time to. I mean, I think all I would say, I think trust in the system is vital. And I think avoidance, however we define it, undermines trust in the system, because you end up with one person thinking someone else is getting an advantage. And there are other things, as we've discussed, the way that multinationals can exploit differences in tax systems across the world to obtain advantages that others can't, also undermines trust in the tax system, even if we don't technically define that as avoidance. And it is vital that we as tax professionals work towards measures that increase trust in the tax system, and that we support whatever it, whether they, in the domestic arena, actions that stop tax avoidance, and in the international arena, multilateral measures to ensure that people can't shift profits away and end up with perverse tax results, and greater transparency. That is our responsibility as responsible tax advisors in democratic societies.
Should HMRC, the Treasury, lead by example, or should they just tell us how to behave ourselves?
Well, I think HMRC and the Treasury should lead by example. And I'm very pleased, as what we didn't mention earlier is, as you probably know, that, as I've said to you, I am now an independent advisor to HMRC's Professional Standards Committee. And what I do see at HMRC, certainly at the top level, is very much a desire and a commitment to lead by example. There is a realization that things have not been done in the way that they should have been done always. The formation of the Professional Standards Committee, whose terms of reference are on HMRC's website, and the membership is there. Say I'm an advisor, not a member of that committee, an advisor to, not a member of that committee. That's there for all to see. There are other measures we've discussed that we've been working on with them from the profession in terms of trying to improve their inquiry process, make the letters less formidable, but more less frightening, but more informative, and to ensure that everyone knows what's happening when an inquiry is happening and what type of inquiry it is.
What about giving straight answers and accurate answers to parliamentary committees when the questions are quite searching? Is that something we should take as a given, or?
I'm not. I know what you're referring to there, Keith, and I'm not going there, because I've also seen HMRC's refutation of what you're referring to. So,
well, I wish I could. I'd like to see it, because they've not had the courtesy to show me. But never mind. I think we'll end it there. You've been extremely kind.
Thank you,
Glyn, thank you very much for the time, especially longer than I anticipated. I really do appreciate it. I hope that when this gets posted online, you'll see a copy beforehand, that you won't be deluged with a whole load of abusive comments, because you certainly don't deserve them. You've answered the questions frankly. It's been a discussion. I'm sure there are further issues we could delve into over a drink one day, face to face, whether it's with recording or not. I think the most important thing for us is that maybe that day will come sooner rather than later.
I do hope so, Keith.
But
it's been a pleasure to talk to you. And
thank you very much. We'll meet.
We may not always agree, but I hope we can continue to discuss.
Thank you very much, and I really do appreciate this.
Okay, thank you, Keith.
Okay.